Current monetary policy is sowing the seeds for a much deeper crisis down the road. Craig Erlam, Oanda. Craig, the week ahead is dominated by central bank meetings, with the FOMC the main focus. Having said that, the consensus seems to be it would be a surprise if the Fed or any of the other major central banks made change in policy this week. Do you agree?
Any move in policy from the Federal Reserve, for example, would actually be quite irresponsible, because while part of their job is to monitor price stability and adjust rates accordingly, the other part of the job is to communicate it properly to the markets so we don't have any adverse consequences of it. So clearly no rate hike this month has been properly communicated. So I think really what people are really focused on this week is going to be the communication, and that's become a very important thing for the central banks. We saw back at the end of January the Bank of Japan cut interest rates and moved into negative territory for the first time, and while the initial reaction was a bit of weakness in the yen, clearly the communication surrounding this decision wasn't really taken too well by the markets, and the yen continued to build and to rally off the back of this. We saw a similar thing last week with the ECB. The initial reaction to this bold stimulus program in their defence was initially got the reaction they were looking for the market, some weakness in the yen and a boost in corporate and sovereign bonds and in equity markets, but then a little bit of communication mistake perhaps from Mario Draghi, and the markets reverse these gains, and all of a sudden we get this kind of chaos in the markets, which the central banks are trying to remove really as a result of this communication. So I think the important thing this week is going to be, have the central banks learned from these most recent mistakes and learned that the markets are very sensitive to what they have to say, and will they correct it? And I think that's going to be the key point this week.
Amid these unprecedented decisions and, of course, the oil rout, investors are making moves for safe havens. Some are saying either the economy recovers or it lapses into recession, and the impact of the 2007 crisis will be seen merely to have been deferred. Which scenario do you think is more likely?
Unfortunately, I find myself in the latter camp. I do think policymakers find themselves in a very difficult position right now. They're almost single-handedly trying to ensure that these economies continue to grow, that unemployment remains as low as possible, while trying to ensure price stability in a very low inflation environment. And I think the issues facing the global economy right now are very structural, and I think there's very little really that central banks can do about this in the long term. They're just really filling in the gaps while leaders around the world try and fill in the fiscal gap, which has grown so substantially over the years. So this is a problem which is now really, I think now in particular, is building now that we're seeing so many central banks adopt negative interest rates. And for me, I do fear that what we are doing right now, as I mentioned earlier, is just sowing the seeds of a much deeper crisis down the road, and how we deal with that, I think, is going to be very key.
Some commentators are suggesting buying the dollar against the pound. As you mentioned, the UK MPC meeting on Thursday is likely to be a non-event, but the budget on Wednesday will probably see revisions to growth forecasts downwards. There doesn't seem to be too many opportunities for good news for sterling in the meantime, does there?
I completely agree. I think any sustained upside in the pound is going to be hard to come by personally. As you mentioned, if we start with monetary policy, then the chances of an interest rate hike this year are looking more and more bleak. I think the economy is facing potentially a very difficult few months now as we head up towards this EU referendum, the vote of which is going to be much closer than maybe people imagined when the referendum was actually promised by David Cameron. I think the vote is looking much closer, which is going to add to that uncertainty around the UK. It adds to the uncertainty as well about where the UK will be in 1 year's time, in 2 years' time. I think the worst part of this is if there is a vote for an exit from the EU, people don't actually know what this means for business, what it means for jobs, because no one has committed either way. So I think that could really have a negative impact on the economy, and of course, therefore, on the pound as well.
And just lastly, Craig, what else should we watch out for this week?
Yeah, it's going to be a very busy week. Like you've already highlighted, I think the key events this week. We're looking at these central bank moves. Of course, we've also got the RBA minutes out overnight. We've got the Bank of Japan overnight as well. But we've also got things like the UK jobs report on Wednesday. We're going to get the latest unemployment readings, earnings data as well, which of course is extremely important. If we want to see inflation returning to the UK economy, then one of the best ways in order to drive that is going to be people earning more money, of course. I like the look of the crude oil inventories on Wednesday again. I think WTI and Brent crude have become some of the more interesting markets over the past 18 months. And the fact that we're still seeing this oversupply story at a time when both of these are actually rallying quite strongly over the last month or so. I think that makes these numbers quite important, and I think that they're going to attract a lot of attention.
Craig, great to speak with you, thank you. Well, viewers, watch how these events and more unfold by sticking with us on Dukascopy TV. Goodbye for now.